My friends, what is going on? Welcome back to the channel. Let's get right into it. I'll try to keep everything as short as possible. First things first, you guys know the deal. I'm not a financial advisor. Everything I'm doing is for education and entertainment purposes only. If it is helpful to you, as always, please like and subscribe. Tell your buddies about it. But you got to make your own decisions, okay? Do what's best for you and your portfolio. You guys know the deal. Like I always say, at the end of the day, you're going to be the one left with it and responsible for its decisions. So if you haven't done so already, please follow me on Twitter, Colin_Gladman. It's always the easiest way to keep up with everything that I'm going to be doing. If you've been back to my channel recently, I recently had eye surgery, and so if I went MIA on YouTube for a little bit, I'll always try to keep everybody up to date as far as what I see going on Twitter. First things first, let's talk about what I tweeted out as far as what's going on with Gary Gensler and the SEC. He put out this video today talking about how awesome the staff is and everything like that. Meanwhile, Ortex at pretty much the exact same time was talking about how the SEC is failing to update the FTDs for AMC and several other meme stocks. The FTD stands for failures to deliver. It's basically where the shares aren't actually delivered and they just keep piling up on all these stocks. And he's out here talking about how awesome the staff is and how many wonderful changes they're making. And it's just like, dude, it really feels like he's just trolling us at this point in time. I don't know if I would say I was a supporter of his. I was definitely hopeful whenever he first took over. But I mean, it's just been... unless there's things going on behind the scenes that I don't know about, which is always possible, okay? I could always be wrong on that. I mean, it has just been nothing but when I watch his interviews, I feel like he says a lot of the right things, but man, there's just zero follow through and action with it. And at the end of the day, that's what you got to judge people on. You got to judge people on their actions and not their words. So that's just crazy, but not what this video is going to be about entirely. It's just the hypocrisy is hilarious that he's coming out talking about how great of a job they're doing. Meanwhile, Ortex is like, hey, this is a duplicate of last month's FTDs, not the actual ones. And it looks like it did get updated correctly eventually. But just like, come on, man, you're the SEC. What are you doing? Let's go over the chart. Let's go over a couple things. I want to show you guys... We're going to start with basically talking about what I posted on Twitter first as far as the fibs are concerned. Then we're going to jump into a bunch of really cool divergences that I see going on right now. And then last but not least, we'll update everything from a cycle standpoint. So just looking at AMC's chart, it's starting to look like we are finding a good solid local bottom or floor. You can see we pretty much returned back to where we were before we had that, kind of March, massive run up and through the end of March where we moved up 160%, pretty much coming all the way back down, not quite as low. And this is what we've been looking for the entire time. I said in my Sunday video, so long as we make a solid higher low than so we've already got the higher high from up here. So long as we make a solid higher low, then our bullish reversal is still intact at that point in time. So you guys know the deal. I was looking for about 618 retracement to start a possible wave 3. That hasn't happened, but also, like I said in Sunday's video, that only becomes invalid if we come back all the way and make a new lower low. So pretty much so long as we come down, whether it's a double bottom, whether it's we're where we are right now, so long as we make higher lows from here on out, or at least not lower, overall bullish, leaning more towards the bullish side is going to be my bias. I mean, obviously at the end of the day, overall in AMC, I'm a bull. I'm going to be biased on it. That doesn't mean I don't see short-term downside. But what I'd really like to see is us staying relatively flat to maybe even a little bit of downside going into earnings. Also, earnings, guys, if you Google it, it may be updated by now, but when I was originally Googling it, was still saying May 5th on earnings. And it is going to be Monday, May 9th after market close is AMC's next earnings and earnings call. Also, I'll get a little bit more into detail on what I think as far as earnings once we get a little bit closer to it. Adam Aaron has already come out and said, don't be blown away by box office numbers or anything like that. Quarter one is typically always going to be your worst box office numbers, but they've got a lot of bangers lined up throughout the rest of the year. So from a pure box office standpoint, I'm not that excited about earnings, but from hopefully some news and things of that nature, which like I said, we'll jump into later. So from a chart standpoint, so from our local of what's been going on from that middle of March run, here we are. We've come back down. The 885 Fibonacci retracement has been what is acting as support, and the 786 is going to be what is acting as resistance. We've had 1, 2, 3, and now today 4 failures of breaking back up into that 786. Let me turn on some volume here. Now the good news is today was a slight increase over volume. We got over 31, which is the first day we've hit that in quite a few days. So it was nice to see an increase in volume, but once again, clear as day. I'll zoom in here a little bit closer so you can see. I mean, once again, we are just getting, let me line this up just a little bit better. It's easier to see when you get in here closer. But you can see why I believe Fibonacci ratios are so very important. Look at all of the almost perfect touches of resistance on the way up and almost the perfect touches of support on the way down. Okay, so there's key levels on every stock. If you're new to my channel, I believe there's key levels on every stock. What happens in between those key levels is going to be a lot of noise. Everything that happens at those key levels and the volume that comes in or out with it is going to tell you a lot about what is going on as far as that goes. So this is what I'm going to be looking at holding. We definitely want to see kind of getting back up into that $16 range. So that's why I said on Twitter, once we get back over into that $16 range, especially if we can see a little bit of volume tick up, then that's when I'm going to be anticipating a test back up here to the golden pocket area, right around that 1850. And if you look, if we kind of drag this out here a little bit more, you can see why it's so very important. The 0.5 was acting as a lot of resistance at that 21. Overall, I'm a big believer that once we get over 20 to 21 again, I think that's when we could potentially see some really big moves in AMC. Until then, we might trade sideways or down, but you'll see why here just a little bit when I get to kind of the cycle idea. And obviously, that makes perfect sense when you see 21 is also kind of as the 0.5. Once we get over the 0.5, starting to get a little bit more bullish, going on from there. So overall, I would like to see towards the end of this week, maybe into earnings of next week, that's going to be what pushes us up over the 786 back up towards the 618. Also, too, if we go back and we look at it from a macro perspective, from the buy button collapse right here, you're going to see that, like I said, the 618 is super important to make sure that we hold that kind of 1450 area right in there, which was our resistance pre-June run, and now it's been acting as support post-June run. So that's what I'm looking at purely from a fib standpoint. Now, let's get into some really cool divergences that are going on. So now, guys, I'm going to be on the hourly chart, and I've got extended hours turned on for this. So the first one that I want to look at is going to be the MACD. Okay, so this is a momentum indicator, and you're going to be able to see, so from my blue line right here, you're going to be able to see that as the stock price has gone down, the momentum indicator is still trending upwards overall for AMC. So when price action goes one way and indicators are going the other way, that's either going to be your bullish or your bearish divergence. In this case, these are all going to be bullish divergences. So number one is going to be the MACD is trending up. Meanwhile, stock price is going down. So the momentum looks good even though the stock price is going down. The next one that we are going to look at is going to be the RSI. So the RSI is going to be your relative strength index, which is basically telling you like how strong is the stock, essentially. Kind of another momentum indicator. This is a big one that I use. Someone was asking me about Redbox today, and as soon as I looked at the RSI on the daily, it was up here in like the 90 range, plus there's a bunch of gaps below, and so I was like, no way would I even consider entering into Redbox, not till some of those gaps fill and the RSI cools off a little bit. So we are getting into kind of the bullish territory for the RSI. So meanwhile, the price has been coming down while the RSI has been constantly trending up. So you can see that white line to white line, okay? And I'm doing it from the exact same spots, okay? So price right here was up at the $20 range, and it's been trending up ever since. Let me get that just a little bit better. So it's been trending up ever since. Meanwhile, obviously, price is way below that $20 range, okay? And then the last one that I want to talk about on this is going to be the on-balance volume. So the on-balance volume is going to be what measures buying and selling pressure. And this is a big thing that I've been looking at when it comes to my cycle chart, but this one's going to be the yellow one. So if I come right back here from where we were at like 1860, you can see that the OBV has a huge divergence there. So same thing. So this shows a lot of buying has been taking place, but not a lot of selling has been taking place. So once again, over here, we were at 1879. And now we are at, 50. So we're $3 lower on actual stock price, but the OBV is showing that it is only trending upward and the floor hasn't even been coming in. So the floor is showing right up here, right when we were about that $20 range. And so we've got three very strong indicators that are all showing upwards momentum and upwards more buying pressure than selling pressure. Meanwhile, the stock price has been trending downward. So these are all very good things that you want to look for. It shows signs that people are loading up in anticipation, once again, probably because of earnings, things of that nature. And then here's the cool part. If I go over here to my cycle chart that I've been tracking, so if you guys are new to cycle theory, please remember not everything is going to be one for one. You are not guaranteed the exact same moves, even though similar patterns are going to be playing out. However, it's the levels at which they play out. But you cannot look at these charts, as far as I'm concerned, and not see some striking similarities. I mean, you can look at these tops right here going straight across. So what I want to see is I want to see a similar move right here, that once AMC, so back here in the pre-June of last year when it was at $10, it broke through, came all the way back down. But then once it broke through that $10 again, and you see the increase in volume right down here, then that's when we were kind of off to the races. So if we start trending back up and start heading back up, once we break over kind of this $21, $22 range, it looks like pretty much, right at $22 on the dot almost, then if we start seeing some increasing volume and some fast pushes, then that'll be a time to start getting pretty excited about what's to come. But until then, we're going to keep our jets cool. But if you look also down here, almost the exact same identical bullish divergence on the OBV and the other indicators was going on at the same moment in time. It's harder for me to get all of it. I like to try to get all of it in the same screen, but because what we're playing out right now, the accumulation that we're playing out right now is so much longer and bigger than what happened in June of this past year. This would have been back in end of April, beginning of May of last year. It's a little bit harder to see, but you can see, we'll just kind of walk through it step by step. So here we kind of had the little dip down before the major spring. So those are going to be the red boxes, the major spring. Then we kind of shot up into this M shape. You can see that in the green and the purple. Now here's the biggest difference between the two, okay? Once we broke down below this triangle back in April of 21, it only came down a little bit, okay? So this one, though, that we just played out actually broke below the spring. So back in April of 21, the spring was the lowest point, that we saw before eventually moving on up. This time, in what you can see in the orange box, it's the exact same shape and pattern and everything like that. It did make the lower low. And my opinion is it made the lower low because even though we're playing out the same pattern, we're not playing out on the same market, okay? And there's been obviously a lot of, bearish sense. You guys know if you followed me on Twitter, everybody last week was like, this was the start of the '08 crash. And I was like, no, fam, this isn't. And, well, it's been fun on Twitter the past couple of days, but it is what it is. But you can see this is where we made our lowest low, where before the spring was the lowest low. But then other than that, pretty much the shapes are playing out almost identical, okay? So even the timing of earnings and everything. So I am keeping just a close eye on this. I'll let you know if anything, crazy diverts. So once again, it's not one for one, but overall we're looking for similar moves and everything like that. So if, I keep tweeting out that bulls like certainty. So if we see, the Fed tomorrow lock in the interest rate hike, I think it's a 50 basis point hike. If we see them lock that in tomorrow, what everybody's been anticipating, then I actually think we'll see a nice little bull run here for a little bit. If they do come out and say, if we get bad news and, the interest rates are going to be way more, if they have to be way more hawkish than they even thought that they were going to be, then we could anticipate some market problems. Then we might see this not playing out so well at that point in time. So this is a time to be very cautiously optimistic, but everything is setting up very nice. But we've had some nice setups before that haven't really played out. But overall, just being as honest as I can, this is as good as I felt about AMC stock since November of last year. So cautiously optimistic. These are all the different things that I'm watching for to play out. A lot of really good silent bullish indicators of what might be going on with the stock behind the scenes. And so now we just need, price to start catching up with where some of these indicators are at. But that's going to be everything for me today, guys. Once again, please like and subscribe if helpful. Once again, not a financial advisor. Make the best decision that you can possibly make. And we'll see you guys soon. We got Doctor Strange coming out this week. Obviously, it's going to be doing, gangbusters. I've already got my son and I's tickets for that on Thursday night. So go out, support your local theater, even if it is an AMC. Let's keep that theater business booming. And I will see you on the next video. I'm not sure when it'll be, but I'll see you then. Y'all have a good one.